Hey, Erica.
Hi, Dean. Hi, Ellen.
Hi,
Erica,
Dean and Erica.
tell folks a bit about you, and then I'm going to ask Alan to do the same thing, and then I'm going to drop you guys into some questions uh, about people who are not you.
Okay. So I am known as the person who recruits the make money marketing leaders and not the make it pretty ones. I run a retained executive search practice called
Mm-hmm.
The Connective Good. Everything I do is focused on recruiting B2B SaaS CMOs and VPs of marketing in scale up companies, often private equity backed, not always, but mostly. And they're all kind of in a situation of what got us here won't get us there.
All right. And Alan, who are you again?
So, Alan Gonsenhauser, good afternoon. Hi, Erica. Hi, Dean. So, I'm a coach to CMOs and marketing leaders. So, I help CMOs, I coach them to become indispensable. And I also come on as an interim CMO, mostly for private equity portfolio companies. So, I help those companies grow and I help the marketing and sometimes customer leaders flourish in their careers. And similar to what Erica said, moving from being tactical to being strategic and growth oriented.
Cool. All right. So we're going to play a series of little games. First game is, why is this good news and why is this bad news? So, Erica, I'm a CMO. I'm not, but in this story, I'm a CMO at a company that I just found out a private equity firm is about to put a bunch of money in and gobble up a bunch of the stock. Right? Why is this good news for me, or why is this bad news for me?
Okay, good news first. You will learn and you will earn in the best of situations. So it's a new career experience if you haven't worked in a PE backed setting before.
Mhm.
It's probably, it could be less chaotic than a VC backed situation, especially if you're evolving from a founder where it's their baby to
Right.
a professional CEO. That's not always the case, but that can be the case. You'll be exposed to new frameworks and new kind of discipline for doing your work. You will be probably raising the bar for yourself, or the bar will be raised for you in terms of rigor and reporting. You will connect to new people. The PE sponsors can be people that will be partnering with you, and you'll likely learn from them, and you'll probably connect with the other marketing leaders at other portfolio companies, and so that could be a great network. So it can be the last time that you're ever looking for a new job,
Mm.
especially if you just recently joined, because sometimes you join a portfolio and you do a good job, and then you get rotated around to different companies within the portfolio. And then, of course, there can be a pot at the end of the rainbow, assuming you got through the whole arc of value creation.
Right. Why
Where
is it bad?
I'm sorry,
Why is it bad?
why is it bad? I would say it's not necessarily bad, but you could get replaced is the most is the most obvious thing. That you have a new CEO, a new board, not always a new CEO, but often,
Mhm.
and they can have a new way of running the business, and maybe it's a situation like what got you here won't get you there, where they're looking for a new type of talent, and maybe you get replaced, or maybe you get somebody layered over you. You can also feel like there's somebody in your shorts, so to speak. Like, you can feel like you have a couple of different bosses, whether it's, the CEO plus the PE shop, and there will be more scrutiny. The good news is you can say you had an exit, and that's not a bad thing. I think there's often more good than bad, but I know you're trying to get at both things.
I have never heard the phrase "in your shorts," and now I know I'm never going to forget it. It's very visual. Okay, good job. So, Ellen, same game. Why is it good? Why is it bad? So,
So, I
you're
think if
in
you're
your
just
case, you work with a lot of those folks who are like in that role, or you're sort of holding the place for them as the interim CMO at that portfolio company until like a permanent replacement is hired, right?
yes,
So,
that's a lot
why
of
is
what
it
I
good?
do.
Why is it bad?
It's good because you're going to learn a lot very quickly. You're going to go fast. You're going to learn how to be really strategic in terms of short and long term growth to contribute to the private equity value creation plan. if you make it through the entire journey, you're going to make a tremendous amount of money. And you're also going to be, once you're successful in that environment, you're going to be tapped by other portfolio companies of that same private equity firm. Depending on the PE firm, that could open up a whole new world of opportunities for you with your current company, but also other companies. And you're going to learn a lot of models and frameworks and how to drive go-to-market success and alignment, almost like boot camp, but it's fast. So you have to go with the speed also.
What about it's going to make me miserable then?
If your orientation, your background is primarily marketing communications and branding, and you haven't really grown companies and managed the holistic combination of brand, demand, and customer-led growth, so you can contribute to value creation. And if you don't speak the PE language, you could be replaced quickly or eventually. So that could be a bad thing. So if in fact you're thinking that you may be acquired by a PE firm, it's really good to begin to learn the language and speak not only in Marcom and branding terms, but also how you're going to grow the company and what actions you're going to contribute, and how you're going to be aligned cross-functionally. You really have to act like a general manager. Think about marketing, sales, product, customer success, and be able to speak to finance, the CEO, and the board in their language, not marketing speak, are ways to survive. But it could be, in the worst, it could be very disruptive to your career if you're not ready for it.
All right, Alan. So the next game is, why the hell don't they love me? So let's say that this is a hypothetical, I'm a CMO and I've decided, you know what? This whole thing of doing a really good job with one portfolio company and getting, basically passed around or have the opportunity to just, move lateral to other ones. That sounds like a really nice setup for me. I'd like to get into that little world. So I'm going to target portfolio private equity backed companies, or I'm going to just talk to private equity companies themselves, and I'm going to start getting into conversations and interviewing for open CMO positions they have. What do I need to do that's different to get hired for that kind of CMO job versus a founder led company?
I would say you need to begin to speak their language. You need to speak the language of finance and the board, and not speak in marketing terms. You need to have some stories. I call them STARS: situation, task, action, results. Stories where you've grown companies in a similar venue to them. Is it in the same domain industry that they're in, the same size? So, 50 to 100 million, or, 200 to 500 million, but things that they're going to be able to connect to. And you need to understand what the time frame is for private equities companies when they invest in companies, usually 5 to 7 years. The first year, let's say it's the first year of an engagement, they have some very serious growth targets in the first year to show success in the first year. And then it kind of pivots over time to long-term growth, looking at retention, right, and, metrics like lifetime value to customer acquisition costs. So you're bringing on, not only bringing on new business, but you're bringing on new business that you're going to retain and grow over time. And one of the main metrics that you need to learn is something called multiples on invested capital. That's the primary metric that PE firms care about. How much can they increase their investment in the, let's say, 5 to 7 year time frame from the time they invest in a company to when they sell it or help it go public.
Yeah. And Erica, you probably know more about this than most people anywhere. If I'm in a private equity firm and I'm interviewing one of the interviewers for a CMO role we're trying to fill, what am I looking for? What am I not looking for?
It helps to have private equity backed experience before. And if not, it helps to have experience working with minimal budgets and kind of doing a lot with a little, and very much focused on profitability. So if you're the hiring leader, you're probably looking for similar industry. You're basically looking to reduce risk as much as possible, right? Because these are financially oriented, people in a very kind of in an industry that can be cautious. So they want to see some pattern recognition from your previous experience to where you are now. So similar industries, similar deal sizes, similar go-to-market motions. They want to see examples of efficiency. They want to know how you have specifically reduced CAC, or how you have shortened deal cycles, or how you have managed your budget. What they're thinking about is, if we give you, whatever, $5 million of marketing budget, what will you return? And I know that's very hard for marketing people to say, that some of them to say like exactly what they will return. And obviously there's some spending that is difficult. Like, not everything that can be measured, is going to make an impact, and not everything that makes an impact, can be measured. However, there is that kind of expectation of dollar in, dollar out. And so managing that that's good for somebody, interviewing a CMO for a PE-backed company. I would say that what's good for PE is often good for other firms too. So if you've been in a PE-backed setting and then you're going to, for instance, looking at a public company or even a VC-backed company, but having that discipline is going to be helpful in a lot of ways. Above all, somebody hiring a marketing leader for a PE-backed company, I always say they don't want to squint. They want to see that, like, this is the next obvious, like, inevitable step for you. They're not going to take huge risks with somebody who could do the job, but it's kind of a bet on them with whether they could or not.
All right. No, that's good. Okay. So, Erica, we'll stay with you for a minute, okay?
Mm-hmm.
It's like a typical Wednesday, sometime in October. So obviously it's Q4.
Mm-hmm.
And you talk to a lot of CMOs
Mm-hmm.
all day, every day. So
Mm-hmm.
that one. So purely by coincidence, you happen to be talking today to two different CMOs at private equity-backed companies. Different time
Okay.
of day, different conversations.
Uh-huh.
One of them, it's like they are just rocking and rolling in that job. Man, it's just wow. And one of them, like hasn't had like a good night's sleep in a long time and can't like relax.
Mm-hmm.
What's the difference between the two of them?
Yeah, so you got like a flourishing one and a floundering one. I would say the flourishing one first. It might not be all them, right? In this market especially, I like to say companies are saying we need the marketer to outwit a bad market. A few years ago, the market lifted the marketer, so it almost didn't matter. The market was so good that a lot of marketers could have made hay. And so you could be the best marketer in the world and still be staying up at night. But leave that aside. So that's not really where you were trying to get. I would say the flourishing person is somebody who has really focused on growth, somebody who has a thick skin, who can take feedback from other people, somebody who is a good educator of what they're doing. They're not just doing marketing and leading marketing, but they're investing time and energy in communicating what they're doing. It's always like manage up, manage out, manage across, manage in, manage down. There's all these different parts of managing, but especially kind of communicate, like the market. They're doing the marketing of marketing. They see board meetings as conversations. They don't get scared by them. They don't see them as inquisitions. They are applying frameworks. They are building frameworks. They are challenging frameworks, not just saying, okay, I'm applying the same thing blindly, but asking good questions about how the framework needs to be evolving. Again, they're doing kind of a lot of reporting, and they maybe they have a little bit of swagger, might be too. I don't know if that's quite the right word, but the confidence and the courage unto themselves that they don't get in a kind of a downward loop of feeling like they're on their back foot.
Nice.
The floundering person on the other side, there could be a lot of things, but they might be the ones that would come in and talk only about brand. Brand is kind of a 4-letter word in PE. So it can help to talk more about positioning and messaging and to educate on kind of, how much investment goes to brand versus demand. They might say, I need a much bigger budget without being able to communicate how they would actually use that, and they struggle to communicate what they have done in the past with their budget. They haven't aligned with their board. They might have finger pointing, oh, it's sales fault, it's product's fault, and there can be, some of that, but ideally the person is able to kind of be business first, marketing second, and look at and have impact cross-functionally, not just within the marketing domain.
Yeah. And Ellen, how about you? You're talking to these two. It's Q4, so they're busy anyway. One of them is just every day that CMO is like, man, I rock at this job. And the other one is like, oh, sweet God, not again, right? It's Tuesday again. I got to have that meeting again, right? What's the how do they end up in these situations?
The one that's flourishing is really good at setting expectations with the C-suite, the CEO, and the board. And they're very good at developing cross-functional relationships. They don't view themselves just as a functional leader of marketing, but as a business leader that is really well aligned with the other functions and looking to help and collaborate with the other functions. So setting expectations is really important. I also feel that, confidence, having self-confidence, and not looking at board meetings as a, something to be scared of, but as a conversation. And also leaders that have done a good job educating the organization what marketing is today. A lot of people have, prejudices based on their past experience that, marketing is a coin operated demand engine, or make things pretty, or do events, or sales support. And those leaders that in the QBR process set it up. So first they talk about the market, what's going on in the market, and the board wants to hear that from a CMO. What's going on in the market? What are the headwinds? What are the tailwinds? What are the differences in technology? How does that impact us and our competitors? Brand reputation, and there's a way to position brand and brand reputation, not just we need to spend all this money, but, it has an impact. It's our future pipeline. It has an impact on win-loss ratios. It has an impact on being at bats. If people, 95% of the people aren't buying now. So when they're ready to buy, if they know about us, we'll have more at bats. So it's brand reputation. Then it's demand, both new business logos, but also upsell, cross-sell of our customer base, not stopping at new business logos. Then it's customer experience, creating advocates. And finally, it's sales and customer success productivity. That marketing is really holistic in all of those areas and can bring people together. That's the flourishing one in my mind. The one that's struggling maybe came from a Marcom only background. They're not used to building a business and building a repeatable and scalable revenue engine, and maybe challenged with that, or they keep asking for a lot of budget without being what's the word? Being very flexible and, doing more with a limited budget, which PE firms often challenge CMOs to do, not having as much budget as they want, picking the essential few things that are going to move the bar, and maybe not being familiar with the language of PE and finance, not being able to talk about EBITDA or how to make marketing more profitable, not being proactive in cutting things in the marketing budget to make marketing more profitable and more pointed and more impactful versus trying to do everything. So, or maybe someone that's a tactical hero. They're great at, tactical and doing a lot of things, but not as strategic on what are the few things that are going to move the bar to the business and really communicating that well.
All right, Alan, next game is called I'm a career coach, kind of. And so here's the scenario. You're talking to a CMO, and the CMO says, hey, I think 6 to 12 months out, I'd like to tackle private equity and sort of become a private equity flavor CMO. What should I be doing now to get ready for that 6 to 12 months down the road?
It depends on your background. If you don't have a background, and it's funny with me, I started in finance before I went into marketing, so I get along really well with CFOs. and the relationship between the CMO and CFO is really important to establish first. So if they don't speak, if they are used to marketing speak but not speaking the language of business, bone up on that and learn the terms, learn what EBITDA is, learn, cost volume profit analysis, the things where you can move the bar in marketing, learn how to do more with less, learn the private equity language. What are the metrics they care about? It's not just pipeline, but it's retention and it's upsell, cross sell, and lifetime value and LTV versus your customer acquisition costs, and what buttons you can push as an executive to make improvements in your go to market growth engine. If you don't have experience in sales or finance or customer success, learn about those functions. Have a strategy on how you're going to be a real go to market leader and general manager, not just a functional marketing executive. And take a look at some PE firms and who their portfolio companies are and what their value creation plans are, and get familiar with how PE firms first have their stages where they'll invest in a company. They want to see a lot of impact in the first year, but then they want to scale infrastructure, people, process, technology, pricing, brand. And then in the third phase, when they're getting ready to sell a company or go public, it's all about communications and why is this a good investment and how can they maximize their value. So I would advise a CMO to learn some of those things to get familiar and understand it's going to be a different environment. It's going to be like boot camp, but it'll be the best learning you've ever had. And if you're successful, you can make a ton of money in those deals. And also, you can have a lot of other opportunities with other portfolio companies or other PE firms that co-invest.
Uh-huh. And Erica, so let's pretend I'm a regular CMO and I've decided, hey, I want to get on this high speed, high risk, high reward money train. I'm being facetious, but so and I know like I wouldn't want to like run into an interview today, but what should I be able to talk about or like able to say truthfully 6 to 12 months from now when I start interviewing?
I would say take stock of where you are and what you've done so far. I interview a ton of people where I look at their resume and it looks kind of blah. I looked at their LinkedIn profile, it looks kind of blah. And I'm talking to them because maybe they were recommended to me. And and then I talked to them, these amazing stories come out like, oh, I started when they were, 10 million and there was 2 people in marketing and now we're at 100 million and I've got a 20-person marketing team. That kind of thing is gold to, well, recruiters in general and
Right.
hiring leaders in general, but especially in PE, there's this very big focus on how do we get from here to there? It's like the 3 to 5x growth in 3 to 5 years. You hear that over and over. So if you can demonstrate that, all the better. And a lot of people have good stories about it, but the stories for some reason are not top of mind, or they just don't think about their background that way.
They should
Similar.
talk to Dean. Dean could help them position themselves.
Yes, exactly. Yeah, or or they could talk to you, Alan, as a coach, for people kind of getting ready to make that pivot. Um, they if they have other exit experience, great. If they have gone through an IPO, that's great. If they have done M&A, that can be a big piece of growth. Okay, we're going to grow some inorganically through M&A and some organically. So if you have experience with companies coming together and rationalizing them and building operational systems across multiple companies and figuring out the brand stuff, I mean, that's good experience. I would also say save your show and tell materials. So it's very common in my searches where my client will say, I'd love to see just an example of some board slides. They could be redacted. That's okay. But some
Mhm.
board slides or a dashboard. How have you, how do you measure what's going on in marketing? What is your cadence and for doing that? And what are the tools that you're using? So to the extent that you can, share and have some of the show and tell and again, like redacting is totally fine. Numbers speak, but make sure they're right. I have seen marketing leaders fail in interviews because they were showing some numbers and the PE folks or the CEO just went right into the numbers. Oh, what about this? What about that? And if the numbers were wrong, then the person can kind of get into this, doom spiral. Of course, the other thing I'll say is, LinkedIn is the top of the funnel for looking for jobs, not so much resumes. So many people try to optimize their resume when really nobody's going to look at that unless their LinkedIn profile is strong enough to pull somebody in. So, we talked about kind of what companies are looking for and what's compelling.
Right.
So make sure that that appears in your LinkedIn profile. I would also say gear up for a process that could be robust. If when companies recruit, when PE-backed companies recruit for marketing leaders, they are, again, they're kind of risk oriented, like trying to manage their risk, and they might have a lot of a lot of steps in the process. They might do behavioral analysis. They might ask for a presentation, and I know that somebody is probably not a good candidate for these types of roles if at the beginning they say, "Oh, I wouldn't do any kind of presentation afterwards, as part of this process after all my interviewing," or if they say, "I'm just scared of personality tests and I don't want to do that at all." Like if you're a little apprehensive and you could go forward, okay, fine, but there's going to be a lot of scrutiny and it's going to be a not an easy process. And so gearing up for that, and it's okay. Like it's not a good fit for everybody, and there's a lid for every pot.
And time investment.
Oh,
Yeah.
okay. So here's my next question. This is we'll play a little game of secret language. Okay. So Erica, will stay with you on this one. So let's say that your best friend is a CMO who is just sort of starting to look around in the PE world and says, Erica, give me like one term that these guys use that you don't really see outside of private equity so that I can use it and just like subtly let them know they should invite me in for a conversation. What is that one term?
That's a great question. I'd say value creation.
Okay. You're going to have to tell your friend what that means in private equity. Your friend's brand new to this.
It's not that complicated. It's like, okay, you have a business that was bought and that company is at, say 100 million in revenue. And then, a few years later, that business is 500 million in revenue and is serving more audiences and is kind of known as being, the category leader, for instance, or a really strong category player, has stronger business fundamentals in terms of, like efficiency of growth and holding on to customers, and as such, then the PE firm can sell the business for a lot more, that's kind of how I would explain it.
Okay, good job. And then Alan, your best friend, a CMO, wants to know a special term, insider language for PE, so that they can subtly let people know that they're part of that tribe. I hate that word, but they're part of that tribe. What secret term or word are they going to use? What are they going to drop casually?
Yeah. Well, MOIC, multiples on invested capital. I mean, that's the main metric, but it's really all about value creation, intelligent growth and profitable growth. And picking those few things that are really going to have an impact on the growth and brand of the company to make them a category leader. And that can happen through organic growth and also M&A. But, the things that are going to create more value, so their investment's going to be worth a lot more in terms of multiples when they sell it versus when they buy it.
Okay. I would have bet up to $5 American that one of you was going to say rule of X or rule of 40 or something, but I guess not. So that's cool. Off we
That's
go.
another one, rule of X by Bessemer. Yeah. Modified the rule of 40. But maybe that's a little more to get into than this topic today.
Okay, Alan. So you're giving a little talk to all of these CMOs who are like aspiring to the PE world, and I'm gonna give you the first part of a sentence, of your talk, and you're going to finish the sentence with as many words as you need to like disabuse these people of what they think they're about to get into, right? So like, you're not a good fit for a PE backed company as a CMO if you
Always ask for more budget without being able to justify the investments that you need to make to grow the business.
All right. And Erica, you're talking to a similar audience, and just finish the sentence. Folks, like, you are not a good fit for a PE backed company if you what?
Two-part answer. Sorry. One, if you are too fragile and have a hard time charting your course within four others, and or and if you absolutely feel like you're in a business that could be $1 billion business, but it's only 10 million now, and you want to swing for the fences, PE backed companies are usually like, they don't need to get you from 10 million to
Right.
1
They're not
billion.
moonshot companies.
They're not, I'm sorry.
They're not moonshot companies. They're like 2 or
Right,
3x
right,
companies.
exactly. So, yeah, so it's more about, getting on base than an absolute home run, and or getting to,
Mhm.
I don't know, like, halfway around the baseball diamond
Moneyball.
or whatever.
Yeah.
Yeah.
A double.
So, which, is important because, you know, maybe you see a path for a huge amount of growth, and the PE shop will say, well, we really only need to get from 10 million to 50 million. And then we're good. Like, we've achieved our goal. And then it's a different PE sponsor that might get you through to the next level. And so even if the market is going gangbusters, you might face that. And that could be frustrating to you if you are kind of more of the moonshot type.
Okay. All right. So Erica, every job has, pitfalls or traps or cliffs you could walk off of if you're not paying attention. A lot of them don't have guardrails. So, what is if I'm a CMO at a
Mhm.
private equity backed company, like, what's a trap or a danger in that environment that I wouldn't have to worry about in like a founder based or family based company?
It's a renovation job in many cases. Often PE shops come in where a company has great fundamentals and,
Mm-hmm.
maybe a great product or, steady growth, but they're looking to really zhuzh it up. And it's not a pitfall. It's just, like, don't expect everything to be perfect. Expect
Right.
some things to be kind of on fire. And your goal is to say, okay, this is on fire, I need to fix this, and this is okay for it to smolder a little bit, and over here we're not going to focus on that. So you need to be a good prioritizer. The other thing I would say is, as a company nears the end of its hold period, it will often cut costs in preparation for sale, and it might say, okay, it's just all about, we're not going to make a huge amount of
Right.
investments, in these areas. So just realize that there's this whole arc. There's a beginning and a middle and an end, and the experience can be a little bit different at each of those times. And just realizing where you are in the hold period can help you avoid surprise.
Okay. And Alan, what about you? As an interim, as someone who helps hire them, as someone who coaches them, what's a pitfall or a trap that a CMO wouldn't have to worry about in a family-owned company versus a PE-backed company?
I think in a PE backed company, you've got to be really good with change management because they invest in a company to create value and to accelerate growth and accelerate profitability. When you're not in that environment, the CEO or the founder may say, oh, it's good enough. We're growing 10, 15% a year. Don't rock the boat. Everything's okay. Not so in a PE backed environment. There's always change. You have to move fast. However, if you could be successful in a PE backed environment, you can probably be successful anywhere
Right.
because there's more pressure. There's more people looking at what you're doing, but the payoff is larger. So I'd say being a good change manager, which you may not need to be in some other cultures, depending where you are.
Okay. So, good answer for both of you. It's time to wind down. I'm going to give something very special to each one of you. I'm giving each one of you like one magical wish. You happen to be the CMO at a PE-backed company right now. That's like your hypothetical situation. You have one magical thing, and that is that I will let you put one belief or thought into the CEO's head, and the CEO is going to believe it and think that way forever about marketing. So, Erica, we'll start with you. Like, what thought or belief needs to be in that CEO's head for the company and the CMO to be successful in that role?
I only get to pick one?
You only get one.
Okay.
CEO's limited bandwidth. You have one memory slot. Go.
Rome wasn't built in a day.
Mm.
That some things in marketing take time, and often when CEOs hire CMOs, where they can go wrong is assuming that okay, that there's a current state and there's an end state, and that they'll get to the end state faster than maybe reasonable to get to, given the current state of data, the current state of operations, the current state of the team, the current state of the market,
The amount of money they're willing to
etc.
spend. Yeah. Okay. And then Alan, how about you? You can put one thought or belief into the CEO or let's say the investors' heads so that from now on they're going to understand and believe this about marketing. What is it?
Can I answer on a business standpoint, not just marketing? So it's related to marketing. It's all about go-to-market alignment. It's being aligned on the right ideal customer profile. Every function moves in the same direction. And it's understanding that brand is really important, brand reputation, because it's your future pipeline. It impacts your win-loss ratios. You'll have more at-bats when people are ready to make a decision. So your brand reputation is really critical, and it's important to be aligned to your ideal customer profile. And I guess I'm answering multiple things. Your future I can't resist. I'm sorry. Your future financial results, more than anything else, are related to providing a remarkable customer experience. So the customers you bring on board that are in your ideal customer profile retain with you, and you can grow them. Revenue and profitability, all that's in the rear view mirror. Right. Your future financial performance is related to the customer experience you engender and your ability to retain and grow your customer base. If you have a churn issue, it's going to kill all your new business efforts. So maybe that wasn't one answer, but that's what I would say.
Okay, so we ran out of time. It's time to wind down. Alan, who should be contacting you these days, and what's the best way to get to you?
Sure. I didn't say my business up front. I probably should have. That my business is Demand Revenue. It's at demandrevenue.com. And because my name is impossible for most people to spell, I have an easier email, which is ag@demandrevenue.com, just how it sounds.
And who?
CMOs that would benefit from a mentor, coach, and advisor, private equity investors that want to amp up their marketing, and CEOs at private equity portfolio companies that are looking to drive more efficient and scalable, intelligent growth.
All right. And Erica, who should be reaching out to you these days, and what's the best way to contact you?
Well, I'm sold out right now, but I do talk with PE investors in SaaS businesses and CEOs of their portfolio companies. Right. And if it's a big enough SaaS business, say, 200 million-ish plus, I often work with CMOs to help them build their teams. And best way to contact me, I also have a name that is a little challenging for people. Is it IE or EI? It's Erica at theconnectivegood.com.
All right. Both of you, this has been fantastic. Thanks for playing the 8 games. Really appreciate it. See you both, and see everyone. Bye.
Thank you.